In a big relief for home buyers, the government has finally amended the long-term capital gains tax regime for real estate. In fact, speaking just a few minutes ago in Sansad, Finance Minister Nirmala Sitharaman said that it is the job of the Modi government to listen to the demands of taxpayers. Taxpayers can now choose between a lower tax rate of 12.5% without indexation or the higher rate of 20% with indexation for properties acquired before the date of presentation of the Union Budget, July 23rd, 2024. This change now enables individuals as well as Hindu Undivided Families to compute their taxes under both the schemes and pay the lower amount. This amendment was made through the Finance Bill 2024, offering substantial relief on long-term capital gains for immovable property. The flexibility provided in the grandfathering provision applies to all property transactions finalized before the budget presentation on July 23rd. The Union Budget 2024, Finance Minister Nirmala Sitharaman made some major tax-related announcements. One of the key changes involved the removal of indexation benefits for real estate transactions and the reduction of LTCG from 20% to 12.5%. Now, what exactly is indexation? Indexation, a major bone of contention in the new LTCG, actually accounts for inflation by adjusting the purchase price of an asset, serves to lower gains and consequently decrease the individual's tax obligations. The uploaded regulations, which were announced recently, will come into effect on July 23rd, 2024. It's important to note that properties acquired before 2001 will continue to benefit from indexation. Now, this means that only recent acquisitions will be subjected to the new rules. So, if you complete any transaction before the mentioned date, then there will not be any impact by the way of new regulations. Remember, before the budget announcement of 2024, indexation benefits helped homeowners to increase the property's cost basis to account for inflation, thereby reducing the net profit and the associated tax liability. So, what does all of this mean for you, the home buyer or the home seller or somebody who's in the middle of conducting a home ownership transaction? Joining us to decode all of this is Richa Sani, Chartered Accountant, Walker Chandiok and Company LLP. Richa, thank you for taking time out and being here with us this evening. Very simply put, there was a new LTCG introduced in the budget. Now there have been amendments to that. For the end user out there, somebody who's looking at acquiring a house or selling a house and buying another house, what does this really mean?
Yes, indeed. It's a big relief for homeowners, and in particular, it is the resident individuals and the HuFs which are going to get this relief in respect of the property that was acquired before these provisions were brought in form of a bill. That is, the cutoff date here is 23rd July 2024. So, but it's important here to note for individuals who are not directly holding the property but have used some form of a structure to hold the property. For example, there are cases where people hold properties through a company or an LLP. In that case, this benefit is not available. And considering this benefit has been given only to the resident individuals and HuFs, non-residents cannot take the benefit of this relief that has been provided. If you are a non-resident, then what you could think about is whether the tax treaty with the country where you're currently housed, it contains any non-discrimination clause, and whether you want to check that out basis the stakes involved. So that is one thing that is there as far as the ambit of the people who are covered. Now, contrary to what is being said, it's not that the indexation has been reinstated. All that the FM is done is to ensure that the individuals and HuFs are not worse off under the new scheme or the new provisions just because they bought a property based on certain premise and based on certain aspects which they factored in at the time of purchase. How this will work is that you will first compute your tax liability under the new scheme. Say, for instance, let me take an example. If a tax works out to be, say, 15 lakh in your case, in that situation, then the next thing that you need to do is compare the tax that would have been, that you were liable to pay under the old regime. Let us assume that it is 10 lakh. What this scheme now tells you is that you can ignore this additional 5 lakh rupees. So that is the crux and the substance of the scheme. Now, why I'm saying is that it's not that indexation has come back. The reason is I'll talk about two more scenarios. And these two more scenarios are situations, say, in an instance, let's consider a case where on account of the indexation benefit, you have a situation of a loss, which means that there is nil tax payable. If you do a computation under the new provisions, you have a tax of, say, 5 lakh rupees. What the provision will enable you to do is, it will enable you to ignore that 5 lakh of tax and pay nil tax on that, but it will not permit you to carry forward the loss under the old regime, which would have been possible had the indexation benefit kept being reinstated in its full form. Similarly, if I take an example where you have loss in both the scenarios, you have a loss of, say, 15 lakh in a situation where you are doing an indexation benefit, and 10 lakh in a situation where you're doing not taking the indexation benefit. Under the existing law as it is proposed, you will not be able to carry forward 15 lakh. All you can carry forward is 10 lakh. And of course, for properties which are acquired after 23rd July, the new system will continue where there is no indexation benefit.
Okay, so this makes complete sense for somebody who is actually looking at transacting in the real estate space from an investment perspective, Richa. But consider the example of somebody who is, let's say, hypothetically, somebody who bought a house 10 years ago, 2014, and is looking at selling that house today to acquire another property. Does the taxation change in that case?
So, for each of these individuals, you will need to do a fact-based assessment. There could be several scenarios. The rollover provisions have not gone away. So, if you are somebody who had bought a house and you're planning to reinvest, there is Section 54 benefit which is available. And therefore, if the entire capital gains is invested in buying a new house, then there is no impact at all, even under the new regime, as was the case in the old regime. Okay. Now consider a situation where the new house that you propose to buy is more than 10 crore rupees. In that situation, since there is a cap on investment, therefore, if there is any capital gains beyond that 10 crore threshold, that is something where there will be still an exposure of capital gains. So it actually depends on how you're going to do that. And of course, if you are somebody who's planning to buy now, then going forward, what I would say is that if you hold the property for a shorter duration, then maybe your taxation is going to be less. The longer duration you hold it, there might be a higher taxation if you still were to compare it with the earlier regime. And of course, where the property was situated. We have seen recently, there was some data released that maybe Mumbai and NCR, they ranked 3rd and 5th in terms of the rate in which property prices have risen. There are other reports which say that some of the 2-tier and the 3-tier cities, they are going to have exponential increase in the property prices in the coming years because of the infrastructure developments that are happening there.
Right.
So if that is the case, going forward, the indexation is not going to be available. So that is something you've got to factor in.
All right. And CBDT has also given some clarifications, Richa, and it has done this sort of, calculation, a cost-benefit analysis of old versus new LTCG regime. And it says that if you have purchased a property, you've held it for a period of 4 to 5 years, and the appreciation in that property has been up to 16%, between 12 to 16%. And if inflation has been in the range of about 4 to 5%, then the old structure may be beneficial, or rather, in fact, that is when the new structure is likely to be beneficial. But we know for a fact that inflation has been much higher than 4 to 5%.
Absolutely.
And appreciation actually on real estate seldom goes into double digits when the CAGR on an annualized basis is considered. So, and then another scenario of the benefit of the new structure happens to be if you've held a piece of property for more than 5 years and it has given you 1.7x returns, which is about 70% return. And the third scenario being that the new tax regime will be beneficial if you've got a property that you've held for 10 years and it has appreciated 2.4 times or 240% appreciation. Are these realistic scenarios looking at the overall real estate boom in India? And does it really stand to, to benefit people, who have actually made those sort of returns on real estate?
Very frankly, I'm sure the whole data has been done in a very well-meaning way, and all these factors have been considered, but these case scenarios are actually not available in public domain. What scenarios that we have actually encountered is that, in many cases, this may not actually work out. So I'm sure that there are certain assumptions which have been made behind this particular data, which is not really there in public domain. So from a layman perspective, and whatever analysis seems to be there done by taxpayers, I think that you would still need to do a case by case analysis and see how things pan out for you.
So eventually, Richa, I mean, up until 23rd July 2024, the presentation of the union budget, the fact that somebody who has already transacted or is likely to transact on a piece of real estate which he or she owned before the 23rd of July, any transaction on that happens to be optional in terms of the tax regime that you want to choose. But the point really is, what was the need for the government to introduce such a complex structure and then amend it? Who stands to benefit or who stands to lose by way of these amendments which have now been introduced by the government?
See, if you see that...
Simple question being, is it the government making more money with the new regime, or the eventual taxpayer actually standing to win? Who eventually becomes the winner in this situation?
If I were to look at some numbers which were released by the government recently, so the center has raised around 2.78 lakh crore from long-term capital gains in the past 5 years. Now, if you look at the positioning of these proposals, it was, when the finance minister moved to the revenue generating part of things. There was a lot of, in every budget, when you give certain reliefs, there are certain measures that you need to take to garner that much resources also to take care of the expenses that are there. So this was basically covered in those category of the proposals. So, as I said, it's been done in a well-meaning way by the government, but it requires a case-specific analysis for all individuals to assess whether at all you gain. It depends on where your property is located, whether there is an appreciation, if at all, then, whether it exceeds, the way the data as by the government has been shared. So all those have to be factored in. And I would say that, past 2 weeks, we've seen all sort of recommendations being made to the government. There were cases, there were recommendations on having 2 regimes run parallelly, and the taxpayers could pick and choose. There were provisions, there were recommendations that you do grandfathering in the true sense of the word, where even the losses could be carried forward. There were recommendations that FMV of 2001 could be moved up, say, to 2021, and this could be periodically hiked. And the other was that you defer these provisions for a few years so that people could do whatever they wanted to do with the earlier properties. What the government has done is they've just kind of picked and chosen what they felt was the best suited for this relief.
All right, so the government seems to have chosen what best suits the taxpayer. Well, Richa Sani, thank you so much for joining us. And you, our viewers, if you're in the middle of a transaction relating to real estate or property ownership, this would be a good time to speak to a chartered accountant.